Texas Fence Contractor Tax Guide. Understanding sales tax rules on fence jobs. For fence contractors in Texas, sales tax compliance can be more confusing than it should be. The way you bill your customer, lump sum or separated, combined with the type of job and how the fence is installed, directly impacts what's taxable and when. At Brown Goertz Co, we've helped hundreds of Texas contractors avoid overpaying tax and avoid large audit assessments. By understanding the nuances of these rules, here's a summary every fence contractor and their CPA should know. What document controls the job? Let's start with the governing document. Before you worry about billing style, figure out which document applies. If you have a contract, that's what governs how the job is billed. If you only have a quote, that's what applies. If there's no contract or quote, the invoice becomes the controlling document. Lump sum versus separated. Here's the difference. Lump sum means one total for materials and labor. Separated billing means materials and labor are listed separately with prices. Why does this matter? Because lump sum jobs are taxed differently than separated ones. And incorrectly categorizing your billing? That's one of the most common mistakes we see during audits. Residential versus commercial jobs. A job is considered residential if people live there for 30 days or more. Houses, apartments, and nursing homes are examples of residential property. Everything else is commercial, and tax rules differ between the two. New construction versus repair remodel. How you classify the work is also key. New construction means a brand new fence, a new gate, where there previously was not one, or a complete teardown and rebuild. Remodel or repair means replacing a section, fixing a post, or upgrading part of an existing fence. Your classification determines who pays the tax and when. Real property versus tangible personal property. Now let's talk about how the fence is installed. If the fence is core drilled into the ground or concrete, it's considered real property and follows construction tax rules. But if the fence is bolted down or flange mounted, it's considered tangible personal property and is 100% taxable to your customer unless they provide a resale or exemption certificate. Fences inside buildings. This is a tricky one. If you're installing fences inside a brand new building and the fence is core drilled, it's treated as commercial new construction and taxed based on how it's built. If it's flange mounted or bolted in a new building, it's treated as tangible personal property and is 100% taxable unless your customer provides a valid certificate. And if the building is not new, then any indoor fence work, drilled or bolted, is fully taxable unless you've got a valid certificate on file. Quick tax summary. Let's recap. How to tax commercial jobs. If the job is lump sum, new construction, right pointing arrow, don't charge your customer tax, but do pay If the job is new construction, but it's billed with materials and labor separated, charge tax to your customer on materials only, and use a resale certificate when purchasing the materials. Commercial repair remodel jobs. The job is 100% taxable to the customer unless they provide you with a certificate. Use a resale certificate when purchasing the materials. How to tax residential jobs. Residential jobs billed lump sum, whether new construction or repair remodel, are not taxable to your customer, but you do owe tax when you purchase the materials. Residential new construction and repair jobs that are billed separated. Charge your customer tax on the materials only and use a resale certificate when purchasing the materials. Don't guess. Get it right. Misapplying these rules can lead to overcharging your customer. Or worse, owing back taxes as the result of an audit. Fence contractors in Texas don't need to be tax experts, but you do need to understand the basics or work with someone who does. Need help? At Brown Goertz Co, we specialize in Texas sales tax for contractors. We've saved businesses millions in overassessed tax, interests, and penalties. And we'd be happy to help you get your billing and compliance right. Need help applying these rules to your business? Click the link to our website in the description box below, or message us directly. Thank you for watching. If you enjoyed this video, click the like and subscribe button and hit that bell icon to be notified of future videos to help you stay in compliance with the Texas Comptroller.